Welcome to this briefing. We're going to cover the evolution of Microsoft's partner landscape and ecosystem in Norway. Earlier this year, IDC conducted a global partner survey for Microsoft and did 50 plus in-depth partner interviews across Europe. It's findings from these activities that I'll share with you in the next 20 minutes or so. And I'll also add some insights from the local technology markets in Norway. And combined, this info will provide a current perspective on Microsoft's ecosystem opportunity and hopefully bring you further down the path towards enhanced growth and profitability. My name is Jan Horsager. I'm Research Director at IDC Nordic. My team's covering the IT industry and the technology markets in the Nordics on a daily basis. And of course, we're working closely together with the partnering research team in Europe, the team that's actually conducted the survey and the interviews that we're presenting here. But let's look at the agenda. We'll start by exploring a bit on the partnering momentum right now, and especially Microsoft's position, of course. Then we'll look into the Norwegian market, some markets insights on technology, investments, and so on. Then we'll dive into the business models for Microsoft partners or of Microsoft partners, because the business models and the activity level here is really key to the partner discussion. And then we'll wrap up with some recommendations for partners. But let's start with the partnering momentum. So fast backwards 25 years, partnering has become an essential part of the development of the IT industry and digital transformation, from the need for selling power and pure resale 25 years back, and fast forward till today with new co-creation, collaboration models for business creation and new business models. So if we look at Microsoft and Microsoft's partner momentum in that perspective, Microsoft's partner momentum continues across EMEA in 2022. The survey that we did covered 800 plus partners across the entire EMEA region. And of these 800 plus partners, more than half, 53%, actually already participates in Microsoft's partner program. And half of them, 50% of these partners already participating in Microsoft's partner program, sees Microsoft as their most strategic vendor partner. And even if we look at the partners that are not currently working with Microsoft, they rank 14% of them rank Microsoft as their first choice vendor to add to their portfolio in terms of collaboration or partnering. The three core findings from this 2022 survey on Microsoft partners in Europe, core findings that to take with you, if nothing else from this briefing, but also three core findings that we will elaborate further on in this briefing. So first of all, the partner economic performance varies by partner business models and the activity mix. We'll get closer into the definition of the business models and how this works, but it's just worth to realize that the business model is really central here. The same goes for the IP focus. So Microsoft partner economic value expands with the IP focus, meaning that the value that you're able to add in terms of services or services models, business models, but also products, services, code, IP, classical IP, that actually enhances the economic value here. And deeper Microsoft engagement leads to superior economic outcomes. So the deeper you can engage with Microsoft, the more value the partnership creates. So having these three findings with you. We'll just focus on that business model definition here, because in this study, survey respondents' business models were determined based on their largest revenue-generating activity in terms of revenue shares across resale, own services delivery, and software development. So for every $1 of Microsoft revenue created by a partner, they're created business on top of that, of course. And if you're dominantly resale-led partner, that value amounts to $2.21 for each dollar of Microsoft revenue created. And as you move into the services-led partnership and further on to the software-led and the sort of classical IP driven partnership, well, this amount grows significantly when you get to the software-led partners. So this is worth remembering that, put simply, the transition from resale towards services and software-led partner business models opens up new economic value opportunities for partners to tap into. And if we look at the market then, we're going to focus in on Norway, but we'll start from the drone perspective and from the European customer expectations, because European organizations, end users, customers expect economic headwinds for 2023. IDC conducts a future enterprise resiliency and spending survey, and in the 2022 version here, well, 50%, half of European organizations expect uncertainties that are related to the or the uncertainties that are related to COVID-19, geopolitical tensions, inflation, energy crisis, and so on, to actually negatively impact the annual economic growth in 2023. And 61% of European organizations think that their home country will actually enter recession in the coming year. So the notes are quite negative, but then it's interesting to see that the European IT spending is actually comfortably above the European economic growth. So indicating that the IT investments, the spending, isn't going to go away, even though the economic growth is actually impaired by uncertainty. IT digital investments are part of the solution, and moving forward, it will be even more important to help development in the economy. And if we zoom into the Norwegian market, well, we can see that the IT spending in the period forecast period from 21 to 26, classical IDC forecast period, will be 5.7% on an average basis, or in average, meaning that, again, well above what we think about in general economic growth. And if we look at the sort of differences between hardware, services, and software, we can also see that here are really differences, and we can see that we in the software area we see the best growth chances or expectations, and if we move right and look at then the public cloud services market in Norway and the expectations for that, well, now the expectations get really interesting and much more positive in terms of 21% in average growth moving forward to 2026. And again, we see differences in software as a service, platform as a service, and infrastructure as a service. And some of them, as we can see, the highest growth in platform as a service, whereas the volume is really high in software as a service still. And If we translate that or take that perspective and look at some of the input from the clients interviewed in this project or in this study, we can see that here Tormod Egg from Ironstone actually indicating how customers now are asking them to actually take responsibility for their IT environment, meaning that the customers' evolving needs also changes the need from a vendor perspective in terms of partnerships. And the same approach from Avanade, who's actually Runa Tortrud actually indicating these correlations between the expertise and global IP and the Microsoft platform that they can bring to the market. And summing it up, Norwegian customers, what are they looking for? Well, they are looking for efficiency and cost savings. They are looking for agility and flexibility because they need digital and IT investments to create business outcomes. And to do that, vendors also need to demonstrate agility and flexibility, efficiency and cost savings, the classical ingredients of a deep partnership. When you ask do this growth applies to specific industries, the interesting discussion, of course, is the specificity of industries. So when we look at the revenue share from industry-specific solutions in Northern Europe, we can see that it's 41% in terms of from the IDC's Microsoft Partner Economic Value Indicator survey, but that leaves a lot since the rest is horizontal. And if we look zoom even further into Norwegian opportunities, we can see in cloud again that cloud growth across key industries in Norway are really interesting. They are in close, just above or just around the 20% mark, whether we are talking about financial services, education, central government, healthcare, manufacturing, or retail areas, with a lot of opportunity for digital growth, but also a lot of opportunity for partners to work together. And looking at the expectations for revenue, well, Microsoft-related partner revenue, the direction, well, all is good. The increased level is very high in Northern Europe, and Northern Europe here is Denmark, Finland, Iceland, Netherlands, Norway, and Sweden. But the increased level here, very high, even compared to the rest of Europe. And that means all is good. But it's worth just stopping up and looking a bit on sort of how many or which part of sort of the partner community are in these the three business models that we started indicating: the sell, the resale part, the services-led partners, and the build, the software-led partners. So the bulk part in Northern Europe. Some services, then comes sell, and then we have built with 55%. So there's a lot of room in the build part where the IP and some of the most interesting growth perspectives are. But also very important to look at the number of activities performed by partners in Northern Europe. So in terms of sell, services, build, well, 74% of the partners indicate that they have at least two activities. So it's not only about one of these business models. It's focusing on business models and actually realizing where do you have the best growth opportunities. So let's dive a bit deeper into into the business models of the Microsoft partners, and for this we're going to look at a wider European level to see the trends in a bigger sample. So when we look at these three business models that we defined, the resale-led, the services-led, and the software-led, or we can see here that when we just look at the margin, again, the software-led, the IP classical, and also the maybe innovation part of it is leading the pack, so to speak, with the highest margin, and also when we look at the expectations for revenue growth, same picture. Moving on to into that IP discussion and IP development. Well, what we see in the survey is also that higher investment in IP development is linked to faster revenue growth. So if you are above the 10% in IP development, investment in IP development, well, you can see that in 21 the revenue growth was well above the rest of the group that were below 10% in investment in IP development, and again follows the expected revenue growth in 2022. And that leads us to the obvious question. So where are these IP development taking part? What's defining them? If we look at it across target areas from a European perspective, we can see that it is consulting and professional services that are leading here by far when we're talking about IP investment priority. Much further down the line, at 16%, comes software as a service offering and support services. So the consulting and professional services part is well, that's a priority, but it's also sort of the ability to quickly work with your own IP and bringing it further from here and into the value chain of the partnership. As mentioned in the beginning, partners with a deeper commitment to Microsoft achieve superior profitability and have higher revenue growth expectations. Again, as we see here, very high or very deep commitment to Microsoft results in a profitability which is much higher than in the lower end. Of course, there's a significant jump from the low end to the high end here, but nevertheless, the commitment is clearly what brings business further or develop business in the partner community and in the partner landscape. And partners that embrace co-sale motions have also really good outcomes. And again, the co-sale is, of course, sort of the combination of the sales power and the ability to co-create, collaborate, and maybe as it's indicated from Runa Thorsrud here from Avanade, that could be joint planning on accounts, for instance. Then you are in the loop, then you are starting. So the collaboration, co-creation, very important moving forward in partnering as well. So let's look at the partnership value. To think about what it means for partners to be in a partnership, and specifically what it means for partners to be working alongside Microsoft. So why deeper strategic vendor engagement drives business benefits? Well, as a business here, of course, you need to be streamlined and efficient, have streamlined and efficient vendor engagement if you want to be a good partner, and if you want to have the business benefits. Advanced specialization and differentiation, organizational alignment, and mutual trust. Trimming the organization and the business models and the commitment would result in increased recognition inside Microsoft. It would enable you to access and expand the support and benefits that partnerships actually results in. And the partners bet on Microsoft because they are partner-centric. They have business models that are designed for it, but also there's an open technology and innovation approach. There's a breadth of portfolio. Trusted brand and products are, of course, key as well, but also the customer base, the vast existing customer base that you can tap into as a partner. So finally, 4 recommendations for Microsoft partners in Norway to move further up or down the pathway for the enhanced profitability and growth. Invest for real in the Microsoft relationship, both money-wise, but also engagement-wise, because that will create the commitment and dependency that's needed for real partnership. Expand Microsoft Cloud engagement. As we saw, cloud, that's where the real interesting growth rates are in at least towards 2026. Develop IP, work with value creation and enhance the value of the partnership with IP. And finally, be able and be sure that you engage in Microsoft's go-to-market engine and co-selling opportunities, the fruits that are there and that you should go for as a move to enhance the partnership. So with that, I will wrap up this briefing. Thank you for listening, and goodbye.